Good morning, this is Meir Valensky with Driving Markets. Okay, let's look at what was happening in the markets on Friday. The markets closed up on the week. The Dow closed up over 2%. You've got on Friday the Nasdaq closed up 1.87% and the S&P closed up another 1.3%. So does it look like we're back onto a bull run? Let's look at a few events. On Monday, as I mentioned in my daily YouTubes, there looked like a death cross had formed, which normally is an indicator of a bear market, where markets go down. However, that didn't seem to come to fruition, and what actually happened is the markets went up. So a death cross can also be looked at as a buying opportunity. Saying that, you also had the Fed rates go up on Wednesday, and the markets liked it. They liked the 25 basis point rise, and subsequently the investors come back into the market and started to push up the high risk stocks, which is mainly the Nasdaq. So the Nasdaq closed at nearly 8% higher this week, which is significant. So is it the start of a bull market? Let's look a bit more detail as to what is going on. So you had China, which introduced or indicated to the market that it introduced a stimulus program after a significant drop on Monday in Chinese markets. That stimulus program was enough to push the Chinese market up and recover from its significant losses. So is a stimulus program going to happen now from the States? Very unlikely. Economic growth is definitely going down. All the numbers indicate that. In fact, on Friday this week, you've got the final numbers of the Michigan sentiment report coming out. Earlier in the month, they indicated that will be at a very, very significant low number, more than expected, and the final number will be produced on Friday. The impact of that is that consumer confidence and consumer sentiment is also a significant factor, and with inflation and rising interest rates and the war in Ukraine and Russia, then consumer sentiment has been damaged and dented. And will this have a significant impact in order to bring the markets down or produce a recession? In my opinion, it will. I think we're on the road to recession. When we look at the numbers regarding the members regarding the Fed decision, they voted 8-1 to raise interest rates by 0.25% in the States. However, James Bullard of the St. Louis Federal Bank wanted a 50 basis point rise. Now that means that he's saying he's extremely cautious, and he said that 25 basis point is simply not sufficient. It's not going to do the job. So he wants a 50 basis point. I'm also of that opinion that a 50 basis point is what's needed in order to get inflation under control. It's quite evident that inflation is raging. In fact, if you look at commodity prices across the world, what's happened is that commodity prices on soft grains, the wheat, barley and corn, they shot up on the 7th of March, have now pulled back. However, they've only pulled back 50% of that rise. In other words, that rise in commodity prices is not yet seen or fed through into inflation. This means that the numbers coming out in April for inflation will be much higher than expected. The Fed has stated that they believe that inflation will be on the downward trend after Easter. Wow, where did they get that from? Oil is now back above $104 a barrel. I think inflation is just going to continue rising throughout the rest of the year, and I actually oppose the Fed's opinion that inflation will be under control, and oppose the Fed's opinion that 25 basis points 6 times this year will do the job. I think we need 50 basis points, and I think interest rates should rise 12 times this year, in my opinion. I think that's the only thing that's going to get inflation under control. I think we need to be well above 3% on interest rates in order to get inflation under control. And I'm talking about 4 or 5% interest rates. I'm not even talking about 3% interest rates. So that is a major factor. The other factor to take into consideration, as I mentioned earlier, is that you've got the grain prices and the oil prices are now beginning to creep up. Even though they've stabilized, they're beginning to creep up again. Remember, I said in the earlier driving markets on YouTube that what happens is there is a knee-jerk reaction to war or to geopolitical stress, and then markets pull back. Now you will see the trend go up in all of those soft commodities, including the metals. Even though nickel came down significantly last week, you will see all those metals starting to creep up, and that will feed through into consumer prices, into retail prices, and into the price of goods in the shops. So, in summary, what we're looking at is a rising oil price, rising grain prices. Inflation is going to continue rising. Interest rates are simply at the moment not sufficient, have not risen sufficient to combat inflation, and I think they need to go up significantly, which will have an impact on the economy. I think mortgage rates, as you can see, are going up. The housing reporting this week is going to be a significant number, reporting on where new builds are in the States. That will give us a good indicator. Overall, I think markets will probably turn south in the very, very near future, in the next week or next 2 weeks, and you're also going to have a rising inflation, rising interest rates. Keep an eye out. This is Meir Walensky with Driving Markets. Have a good day.